Hey there, welcome to the AbleSys update for May 14th. And we're going to start here taking a look at the intraday price action, and then we'll talk about how that relates to the longer term development of the market. Looks like going into the last hour here, we've been seeing in the morning there was some strength, a little bit of sideways price action. We see a no trade zone there, and then it falls through. We see the sell signal, and there was a bit of a sell-off there, but going into the last hour here, we've been seeing for the last hour or so, if prices would hold below this resistance, we might have seen the prices roll back down, but it doesn't look like that's the case right now. And so this would have been a good no trade zone to observe, and that really kind of speaks to the type of price action that we might expect. We see that the range has been narrowing, and then last Thursday prices broke through the resistance, the red dots that AbleTrend has been drawing, but also breaking through that line. If that ends up being the case, then we might see this trend in compressing volatility continue. From the monthly picture here, basically the support has held. So we saw here prices it pulled back and is testing for a few months, and then now it looks like it's going up. Now, this isn't the end of the story. We have resistance above here in the weekly charts. Prices may trade up a little bit further, but what we'd really be expecting is for prices to pull back into the support. And there's a good 50, 60 points at this point for prices to pull back. And so that's where we might see that spike or that above average volatility. So as we can see here, for the last several days, we've had below average volatility or below average trading ranges, which makes for less interesting trading activity. If we think of the price action in the context of a swing trade, it might seem reasonable as to why today's price action is sort of up and then down and then up again. And if prices can't get up, we might see prices roll back down, and that would lead to the sort of above average price action. We can see from the last few days the reason why we wouldn't expect the very favorable trading sessions on the way up. We've heard in the news that we've had however many consecutive up days in the market. Up days aren't very exciting when prices are up already, and there's not going to be this kind of explosive price action that we really want to be able to catch. So right now, the sort of pressure needs to be released on the way down. That's where you've got 50 or 60 points down for prices to go. We have the same amount of space to the upside, but it's just very unlikely for that to happen very quickly. And as we can see in the price action from the last several days, a lot of that's overnight, and then the trading session is just flat all the way through. If prices are able to get back down into support, then we might see some more real strength during the trading session. So again, going forward, we just want to be particularly conservative, and that really means sticking by our no trade zones. I think this is the period of time where that's going to be of great value. The power of the no trade zone is that when we do get to that above average trading session, it's not going to filter out our trade. It's going to help us to really still take advantage of it. We're also just going to continue looking for very favorable risk and reward. Okay, so hopefully we will see that move develop this week, and we'll report back during the week to discuss what happens.